Well, other than that, one of the big news in Nigeria is the GDP figures that was released on Friday, and the 3.54% GDP growth of the country in the second quarter of 2022 amidst global headwinds is an indication of resilience. That's the observation of the Chief Executive Officer for the Center for Promotion of Private Enterprise, Dr. Muda Yusuf. Dr. Yusuf, after looking at the details, says it underlines the dominance of the non-oil sector, which accounted for 93.67% of the GDP, while the oil sector contributed just 6.63%. And this is in spite of the fact that the oil sector continues to play a leading role in the generation of foreign exchange and a significant role in the generation of government revenue. A lot of people have said this is a contradiction, but we'll drill down on this with the Managing Director of Optimus by Afrinvest, Mr. Ayodeji Ebo, joining us virtually now from Victoria Island to share his thoughts on this and some of those observations. Good morning, Mr. Aibo. Happy Monday to you. Thank you for sparing some time for us this morning.
Good morning. Thanks for having me.
Yes. So 3.54%, I think from 3.11%. And a lot of people are applauding it. But there are also some questions. For instance, how did we make it through? In spite of all we are recording, inflation at over 19%, the Forex, the FDI threatened, you know, the issue of insecurity also affecting manufacturing and the agriculture sector. How did we make it through from your perspective?
Okay, thanks. I would say, yes, it's a positive one, 3.54%. But there needs to be, we need to know that there's an optimal level that we need to achieve for us to easily see that impact on the populace. So 3.4% may look like, yes, very impressive looking at where we're coming from in 2020, 2021. But we need to, for us to be able to see that meaningful impact in the economy, we need to be able to attain a level around 5% and above before we can see that impact and the populace can really feel the effect. So business activities truly has opened up, and what we're seeing is like we're just scratching the surface, because amidst a lot of challenges that businesses are going through, we can still see that production and increasing demand is increasing. But like you rightly mentioned, high inflation, it means that what would typically be demanding for will also reduce as a result of rising prices.
So are we saying that we are still feeling the impact of the base year effect? Do I hear you say that?
No, not necessarily. So if you look at, if it's on a year-on-year basis, last year was at 5.01%. Yeah, so that effect is fading away. But what I'm actually saying is that for us to be able to see that meaningful impact, because for those of us on the street, what we'll be asking is how much of impact am I benefiting from this increase in productivity? Because when you look at GDP measures the production, increase in productivity, and with real GDP, it shows that we actually produce more. That's taking away the impact of prices, that we actually produce more in this quarter compared to last year's quarter. So, but in terms of feeling that impact on improvement in standard of living, improvement in the impact and growth of the economy, that is really still lagging behind, because yeah, we are just seeing that normal increase in production, but it's in terms of translating into income is still limited because of the several factors that weigh significantly on the disposable income.
Okay, so that means that for Nigerians, for consumers, when you look at their welfare and then you look at their purchasing power, this is just a number.
Yeah, this is measuring production, so it's different from measuring measuring the per capita income, like you mentioned. So yes, for our GDP is increasing, but how much of value are we getting from this GDP? You know, like when we talk about debt, government was always too quick to look at what's the debt to GDP ratio. But that GDP, what is it producing in terms of income? It's not significant. Yes, we are growing, but how much of value are we extracting from it? How much of impact? Even governments, how much of impact are they getting in terms of translating into revenue? Talk less of the private sector. So overall, yes, it's showing that we are producing more, but in terms of translating into naira and kobo, it's not that significant. And I would say that the 3.5% level is still below our optimal level, where we may begin to see that major impact that will translate into improved taxes for the government, improved standard of living for the populace.
So for you, that level would be about 5%, right?
Yes, between 5 and 7%.
Okay. All right. So now help us to understand this contradiction. Now, the oil sector is a major part of the economy, but it contributed just about 6.6%. And yet the non-oil sector, which is being like minimized, has contributed about 93%. Help us to understand that contradiction there.
Thanks. And like we always say, Nigeria is well diversified. It's our revenue base that is not diversified. So you can see that the non-oil sector is what is driving activities in terms of productivity. If you look at the top 5 sectors, you see the agri sector that contributes about 22.9%. You look at the ICT about 18.6%. And you look at trade, that's contributing about 8.6%. And manufacturing, I think about 5.6%. So you would see that like the top 5 sectors that are contributing about 73% to the total GDP are non-oil sector. The industrial, the oil sector, we know that because of oil theft, divestment, is really affecting production. Based on the statistic, I think within that quarter, oil production was around 1.4 million barrels per day, compared to the OPEC quota of 1.8 million barrels per day, and what is also in the budget, which is almost, I think, about 1.8 or 1.9 million barrels per day. So you would see that we are not, in terms of the economy, we are well diversified. But when you look at projection, the budget projection, we always depend on revenue from oil, and now it's not coming in. The CBN also depends significantly from revenue from oil beyond sourcing using Eurobonds and other multilateral agencies. That's like the main source. So all those revenue, those value that we extract from that sector, is we are not benefiting from it, and we're also paying subsidies. So it's like a double whammy. You are not getting the revenue, but you have to also subsidize oil subsidized PMS. So that's a major challenge. And when you look at the non-oil sector, you would see that when you look at our tax to GDP, it's still very low. I think maybe around below 10%. So in terms of even extracting value from that, so if we are not able to extract value from from our activities, it's really going to impact or limit how much of development we can achieve. Because when you are going to build roads, it's not based on GDP. When you are going to pay salaries, it's not based on GDP. Pay the service debts, not based on GDP. It is the value that you extract from that GDP in terms of income that you'll be able to make any meaningful impact and achieve a good growth.
So I guess it's time for us to start really diversifying our revenue. But my attention is also drawn to this air transportation. Air transportation grew by over 22%. And this is the second quarter. And I'm trying to remember, does it mean the impacts of, the aviation fuel scarcity, obviously the threats of some airlines to withdraw their services, international airlines, and even the closure of some of the local airlines has not been captured yet?
Okay, thanks. I think that starting from your last question, yes, the closures started mainly in July, August, which was not captured in this. But there's also that base effect that we can lay hold to for that sector. So look at last year, the economy was just that sector was just opening up on the back of the restrictions that we had even globally. So that is responsible for that year-on-year growth that we are seeing of 22%. But we know that the challenges are also enormous. So when we come into looking at Q3, we believe that it will slow down, because with the increase even in airfare would also reduce the usage, and that is really going to impact on the activity. We know that jet fuel has also increased significantly, so cost of doing business is significantly high in that space. And we know government, based on the report on Friday, trying to resolve the ban, the suspension we're seeing from the foreign counterpart. So with that is also really going to impact on the growth for Q3.
All right, and then another one is, okay, let's look at the sectors that contracted, and majorly we have the oil and gas. We saw that the highest contraction was oil refining at about 42%. That is obviously a major source of worry to the country. We've been talking a whole lot about oil thefts, but the Chief of Naval Staff was on one of our shows and was used on the news at 10 yesterday, and he said the numbers brandished for on oil theft is higher than we think it is. But how do we explain this contraction of oil refining by a whole 42%?
Okay, thanks. And like Professor Soludo will always say that you don't argue with numbers. So even if based on the official data now, we can see that there's really a challenge within that space. So whether it's not up to the amount that is being paraded, but we know that there's a serious challenge. We also note that the CBN governor has also alluded to that in terms of the effects that is coming in from oil, it has reduced significantly. NNPC has also mentioned that in terms of the revenue they also get, that has also reduced significantly. So it's really that we need to solve that problem, because this is this era where oil prices is high. We're supposed to be benefiting as a nation from that high oil prices. Yes, prices are moderating, but we still have a lot to benefit from it if we're able to solve the issue of oil theft. And most times when you look at it, this oil theft, it has to be like a syndicate. This is not something that you just steal and run. So we need to be sincere and focused on how we want to resolve this if we want to move forward as a nation. And we want to, because it's impacting on effects, it's impacting on government revenue, based on debt to actual revenue was at over 100% in the first 4 months, because the oil sector also lagged behind significantly. I think achieved about 24, 32%. So it's really the data have just buttressed the major challenges we are going through within that space. Because when you look at projection for the budget, oil revenue most times will account for about 30 to 40% that we're expecting. But if that part is not coming in, it means that we have to borrow to fund that particular part. But beyond even government revenue, it's creating instability in the FX market, because it reduces the ability of the CBN to also supply. Because if they are not getting, when you look at the external reserves, the major bulk of inflow that the CBN have seen is based on Euro bonds. I think about 8 billion, 6.25 billion dollars that have come in. So it's something that it's a major issue that the government needs to look at if we are sincere that we want to solve this problem and reduce the pain Nigerians are going through.
And then there are some sectors that economists such as Dr. Muda Yusuf have noted that they are still in recession, like textile.
Okay, thanks. For textile, when you look at it in terms of the production, local production, it's really not picking up. And for those that are even importing, there's that impact of FX, which is that major focus would also impact on them. So it's a sector that government also needs to focus on, because it's also job elastic. It can produce a lot of job. I know there was a time the CBN was trying to support the cultivation of cotton, which is a major input into the textile industry. So if this industry can be overhauled, it's really going to create significant employment. And we look at it, if government decides and wants to supply uniforms to pupils in Nigeria, and government funds that, yes, we may say it's a form of subsidy, but it's really, the multiplier effect will be enormous. It's going to be very significant, such that the number of jobs that it will provide, and that money is also going to stay in the economy. And over time, even if the pupils have to pay for the uniform, but it would have stabilized that economy, because the number of industries that would have been set up, the number of production and standardization over time, because what we always complain about is the quality may not be as much as what is produced, but over time, once they see that there's consistent demand, then based on technology and improvements, research and development, they will be able to improve on the quality. So it's also a sector that is very strategic, that can also help and also even generate effects, because we can export those materials and earn significant effects.
Yeah, well, talking about quality, of course, that will come there. Just before we let you go, Mr. Ebo, what's your outlook for Q3? When we look at the parameters, we have stride in the face of a surge in inflation. But, I mean, when we look at, for instance, aviation sector, the challenges there, oil theft also, what do you see at the end of Q3?
We still feel that, yes, we'll still grow above 3%. But like I said, that's not the optimal growth. So rejoicing that we're in positive, it's really not a major issue, not the problem that will grow above 3%. But we need to begin to focus on growing at least about 5 or 7% for us to have any meaningful impact on the economy. So yes, we still expect a positive growth in the third quarter. The PMI data, that's the Purchasing Managers Index, even for July, I think it was around 53 points. So the manufacturing sector obviously will grow, and that would also have much impact. And depending on how much of the intervention that we would see within the oil sector, so that production can increase, that will also have a major role to play in the final figure for third quarter.
I guess, Mr. Ebo, one of the reasons Nigerians are celebrating is in the UK. They've not been recording growth for some quarters now.
Yes, I would like to come in there. When you are comparing the growth rates, they have already marked, when you get to a level, the rate at which you grow reduces. We are still developing. So our growth rate needs to be high. When you look at China, before COVID, you see that growing at double digits. It's because they are just expanding. So it's not going to be apples for apples when you compare our growth rate, even if they are growing at 0.5%. That's massive, because based on the current level where they are developed, they don't need that much growth to achieve that level. Compared to us, there's still a lot of potential that we need to tap, and that we should be growing even at double digits if everything works the way we want.
Yeah, talking about one of the factors of an emerging economy. Thank you so much, Mr. Ebo, for your thoughts this morning, and enjoy the rest of your day.
And you too. Thank you, Pami.